What's up, traders? In this video, I'm going to show you guys the 3 keys for you to become a profitable trader. I'm going to show you the 3 things that every single profitable trader has in common, and I'm going to reveal that to you. That way you can become a profitable trader yourself. Okay, becoming profitable in trading is not as hard as you think. In the beginning, it may seem hard, but I'm going to show you guys here how simple it is with these 3 main things. If you follow what I'm about to tell you in this video and you follow these 3 keys, trust me, you will become a profitable trader. It's not a matter of if, it's not a matter of but. You will become a profitable trader. You just need to follow these things. So we're going to jump right into it, guys. Follow me on Instagram, guys, so you can get updates on my live trading sessions when we go live and we trade live. Also, I share my trade ideas there as well. For example, here you can see we're currently in a trade. Also, join the Discord, right? It's a free public Discord down in the description. You can see my trade ideas, my live calls, and my daily updates there as well. So follow me on Instagram and go ahead and join the Discord. Let's get right into it. Jumping right into it, guys, I created this whiteboard for you to give you a simple idea and to show you these 3 keys and exactly what you need. The 3 keys that you're going to need to become profitable is you're going to need an objective strategy, you're going to need risk management, and you're going to need psychology. If you understand these 3 things, guys, you will be profitable. Don't listen to these social media gurus that's telling you need all of these things. You have a perfect strategy. You need a perfect this, you need a perfect that. No. Find one strategy, right? Build a risk management profile on that strategy, understand psychology, and we're going to get into these topics in a second. Once you have that, you have your trading plan. Okay. These 3 keys are basically the foundation of your trading plan. Once you have these 3 keys and we go over these questions and you answer these questions truthfully, you will have your trading plan. Okay. So let's jump straight into it. The first thing that you're going to need, the first key for you to become a profitable trader, you're going to need an objective strategy. Okay. So the first question we're going to ask you here is, when you're looking for a strategy, guys, there's so many strategies in this market. You have so many strategies. We have people trading ICT. We have people trading supply and demand. We have people trading Wyckoff. You have smart money concepts. You have support and resistance. There are so many different strategies, guys. Find a strategy that works for you. Me personally, I trade supply and demand. Okay, that is the main strategy that I trade. I also trade some ICT as well when I'm trading futures. That just goes to show you every strategy works. Okay, understand that every strategy in this market, no matter what it is, every strategy works. There is no perfect strategy. There is no best strategy. Okay, no strategy is better than the other. Every strategy has their time where they're great. Every strategy has their time where they're not great. Every strategy has a losing period. Every strategy has a winning period. Okay, you just need to identify what works for you. Okay, so if you want to become a swing trader, you find a strategy that is the best for swing trading. If you want to become an intraday trader or a day trader, you find the strategies that are more on the lower time frames or the intraday time frames that are the best for you. Okay, this is the key thing here. What is the best for you? Okay, another thing is, here's another question that I didn't write here that you want to ask yourselves. Are you going to be a setup specialist or are you going to be a market specialist? Me personally, I am a setup specialist. To kind of expand on that, and it is very important. It is very important. A market specialist is a trader that is focusing on 1 or 2 pairs. 1 or 2 pairs, 1 or 2 markets, whether you want to trade indices, whether you want to trade futures, whether you want to trade forex, it doesn't matter. This works for everything. Okay, so if you're going to be a market specialist, you're only focusing, let's say you only want to trade EU. Okay, you are a market specialist for only EU. That means you're only going to be trading the euro dollar, or you're only going to be trading pound. A setup specialist is a trader that trades multiple pairs or multiple markets, and you're looking for a criteria of rules. You're looking for a specific setup. Okay, it's exactly how it sounds. For me, example, I am a setup specialist. Let me show you an example of that. Here's an example of some trades that I'm currently in. Here we are on GJ, and we have this setup here, which is a demand zone. Okay, you can see that's a trade that we're currently in. Here's another trade that we're currently in right here, and here's another trade that we're currently in here on EU. Okay, all of these trades are following a specific setup, or I'm looking for the same criteria. I'm looking for a specific setup, but on multiple pairs. Okay, that is a setup specialist. All right, I am not diving in deeply on each of these pairs and trying to break down every single movement on these pairs. I am waiting for these pairs to give me and show me a specific setup. Once I see that setup, I take my trade. Once you've decided what you want to trade, whether it be ICT, whether it be smart money concepts, whether it be Wyckoff, and you decided that you want to be a market specialist or you want to be a setup specialist, once you decided your strategy that you want to trade, the concept, and what type of trader you want to be, now we can get into what actually you need to look for. Okay, first thing you need to do is you need to ask yourself, what are the rules for you to get into a trade? Develop a checklist of rules. Okay, what do you need to see in order for you to enter a trade? Okay, that is the first thing that you need to ask yourself. Develop a checklist. It doesn't have to be a long checklist, guys. You don't need a scroll. Okay, do not develop a scroll. You just need simple rules that you need to see for you to enter a trade. Once you have that, you can move on to the next step, which is you're going to back test and you're going to forward test those rules. Once you back test and you forward test those rules, now I know a lot of people hate on back testing, but back testing is the easiest way for you to collect a lot of data. Forward testing, you're going to collect data more slowly because you're trading live. Nothing is wrong with forward testing. You also need to forward test as well, but I want you to back test first. I need you to collect a lot of data based on those rules. So once you develop those rules, collect data on those rules. That is going to tell you, that data is going to do one of two things. It's going to tell you whether that strategy and those rules are profitable. Okay, once you see that they're profitable, and I want you to take at least 20 trades, guys. I want you to at least back test 20 trades off of those rules. And then I want you to forward test 20 trades off of those rules, right? That way you can have 40 to 50 trades of back tested data and forward tested data, and that should give you a win rate. If your win rate is profitable and you see that the strategy is profitable, nice, you have a profitable strategy. Okay, that's good. Next, you need to develop confidence in your strategy. The way that you develop confidence in your strategy is you need to continuously trade that strategy day in, day out. You need to continuously backtest, continuously forward test. Okay. And basically all you have to do is like 1 hour every day, guys. Just take the time 1 hour every day and backtest your rules or forward test. All right. Go into the markets, see where the market validated your setup, see where the market invalidated your setup. All right. Build that confidence within your strategy so you know and you can prove it to yourself that it works. Because if you can't prove it to yourself, you're going to hesitate when the market shows that opportunity in the live charts. Okay, we don't want to be hesitating on our rules. Next, a lot of people sleep on this. What is your trading routine? You can't just get up and trade. Yes, you can, but you need to make that a routine. You can't just wake up one day and trade, wake up the next day, go to the gym, come back and trade, or wake up, trade, go to the, like, you need to create a routine, a trading routine. If you're going to wake up and read or get some coffee, wake up and get some coffee, hit the charts. All right. Maybe you want to wake up, read your affirmations, get a meditation in, wake up, do that. Okay. The thing here is you need to create a routine. It is very important. Create a routine. Trading is about routine. Okay. Trading is about routine. So create yourself a routine to where you can wake up every day and do that routine. That's going to build discipline. Discipline is important, especially when it comes to trading. If you can't follow a simple routine that you've made for yourself, how are you going to follow your checklist of rules in the markets? When you see a setup, how are you going to follow that? How are you going to be disciplined to your trading plan if you can't be disciplined in your own life? Okay, that is the part of trading that nobody talks about. You need to be disciplined outside of trading to be disciplined inside of trading. It's not normal. You're not just disciplined in the gym, and then when you get home to trade, you're just not disciplined. What? It doesn't make sense. You need to be disciplined in every area of your life. Once you achieve that discipline outside of trading, it makes trading a lot easier. It makes it way easier for you to follow your rules. Okay? Trust me, I know a lot of people have that problem where you get on the charts, the market is not following your rules, and you take a trade anyways. Why? Because you're not disciplined. Okay. So this will help you form discipline. This will help you build discipline. Okay. So before you get onto the charts, before you trade, ask yourself, what time am I waking up every day? Okay. That's the main thing. What time are you going to wake up every day to get on the charts? Are you going to read before you get on the charts? Are you going to read affirmations? Are you going to write down some affirmations? Are you going to say you're thankful for the day? Are you going to say you're thankful for waking up today? Right? Are you going to go and get some coffee? Are you going to make yourself some breakfast before you get on the charts? Find a routine for yourself before you get to the charts. Okay, build that discipline. It's the tiny things, guys. It's the small things here. After that, you need a warm-up journal. This should be part of your trading routine. This is something that I do. A warm-up journal is basically a warm-up. Okay, so you guys know how you go to the gym. You go to the gym, you work out. Before you work out, you exercise a little bit. You run a little bit, you stretch, right? You stretch your arms, you stretch your neck, you stretch your legs. That's basically what this is. Okay, a warm-up journal is basically a journal of all of your back-tested data. And basically, you just want to throw all your screenshots in a folder or on a journal or some software that, you know, kind of stores it for you. And simply, before you start trading, you basically want to shuffle through that journal. Shuffle through that warm-up journal. And what that's going to do, that's going to exercise your mind. That's going to exercise your mind and get you ready to start trading. Just as if you would exercise your muscles before you start working out, this is what the warm-up journal does for you. Okay, that way you can kind of see your trades before you even get to the charts. You already know what you're looking for because you're looking at it. You've back tested it and you're seeing the screenshot. So it's going to be easier for you to look at a profitable setup or look at a setup that's not working. Or you could look at a setup and like, oh, that's not a setup. It's going to be easier for you to tell when you have a warm-up journal that you've already scanned and is getting your mind prepared to know what you're looking for. That right there has helped me tremendously. Okay, I know a lot of people just wake up and they get straight onto the charts. How do you know what you're looking for? You're looking at your rules, you see your checklist, but I am a visual learner. I know a lot of you are visual learners too. So make yourself a warm-up journal of screenshots of all your data and shuffle through those screenshots, all your losses, all your wins, and go through it so you know what you're looking for before you even start trading. Last but not least, is my strategy objective? That's what you got to ask yourself. You need an objective strategy. I'm not going to lie. You have to become a robot. In order to become profitable, you have to become a robot. You need to look at the market and ask yourself, is this following my rules? Yes, take a trade. No, no trade. It's that simple. It's that simple. You have to become strict. This is why it's important to form discipline, and this is why discipline is important. You have to become strict, guys. You need to become strict. Make sure your rules are clear and cut. No guessing. You want to make sure that all of your rules and all of your checklists are clear. You know when something is confirmed, you know when something is not confirmed. If you're making guesswork and you're struggling and you're hesitating, that's the reason, because you don't have an objective strategy. Okay, so make sure your strategy is objective. It's either yes or no. It has to be a black and white scenario. Did the trade follow my rules? Yes, take a trade. If it did not follow my rules, no trade. This is how you have an objective strategy. This strategy here is what's going to lead you onto the road of becoming profitable. Make sure you have risk management. If you don't have risk management, that is probably why you're not profitable. You might have the best strategy in the world. You can have the best profitable strategy in the world. If you don't know how to manage your risk, you're going to lose all the money that the strategy makes you. Come on, guys. So first thing here, these are some questions you want to ask yourselves. When do I go break even? Am I going to use a trailing stop loss? When can I cut losses? How much are you risking per trade? How much can I lose in a day? How much percent are you losing a day? What is my target? To go over some of these, guys, when do I go break even? Ask yourself, are you going to go break even after the market breaks a high? Are you going to go break even after a certain RR? Me personally, I'll tell you guys personally, once the market hits a 1 to 2, I go break even. Okay? That is my personal risk management profile for that rule. Okay? I go break even at a 1 to 2. I don't use trailing stop loss. Okay? I don't cut losses. It's either TP or stop loss for me. Okay? How much am I risking per trade? I risk 1% per trade. Okay? How much percent can I lose in a day? I can lose 2% in a day. That means if I take 2 losses and I lose 2%, I cut off my computer. I'm done trading for the day. No exceptions. No exceptions. Clear cut throat. No exceptions. What is my target? Are you targeting a high? Are you targeting liquidity? Are you targeting a certain RR? Me personally, on every single trade, I'm targeting a 1 to 3. So you guys can see how I was able to clearly answer all of these questions off the top of my head. right? Because I have a trading plan that tells me that. So all of these are your answers. You're going to have to answer this. This is where trading becomes one of the hardest things in the world because you have so much freedom. You have the freedom to choose how much you want to risk. You have the freedom to choose how much you want to make. This is why trading is so hard. Because of that freedom, a lot of people overestimate themselves and they try to go for crazy numbers. They try to go for crazy profits. Okay. You're not the biggest hedge fund trader in the world. Okay. Calm down. There are bigger players in this market. There's bigger money in this market. There's millions and trillions and billions of dollars moving this market. You have to relax. So make sure that you're being honest with yourself. Make sure you're being honest and you're answering these truthfully. That is the main thing that I see when it comes to traders. They overestimate their ability and the market just destroys them constantly over and over again. And you're constantly unprofitable because you're overestimating yourself. Okay. Start slow, have a steady risk management profile, and you will become profitable. Now, for the most important one of them all, you can have an objective strategy. You can have great risk management. If your psychology is not on point, you will lose. Okay, you will lose. You will not become profitable if your psychology is not on point. Why? Because 5% of the time in trading, that's when you're actually trading. 95% of the time, you're looking at the markets, you're thinking, you're in your head. Okay, you're looking at setups, you're identifying trades. 95% of the time, we're not even trading, guys. We're just looking at the markets, identifying trades, identifying setups, identifying potential setups. You need to make sure that 95% of the time that you are locked in. So psychology is very important. Psychology is so important that I created a board for it just by itself. Okay. But here are some things that you want to make sure that you're paying attention to when it comes to psychology. The boom and bust cycle. We're going to talk about that. Do I have a neutral mindset? What is my perspective on wins and losses? Euphoria, doubt. Detach yourself from the outcome of every individual trade. Do I believe in myself? That is a question that we can answer right now. Guys, if you do not believe in yourself, if you don't think that you're the best trader in the world, I'm sorry. You probably won't make it. Okay. You don't necessarily have to be the best trader in the world. But if you do not believe and you don't have the confidence in yourself to know that you can do this, you can be profitable, you can make all of this money from trading and you can extract all this money off the charts. If you don't believe in that and you don't have that core confidence in yourself, it is going to be a very, very rough ride for you. Okay. Confidence is very important. Confidence in yourself and belief in yourself that you can do it is very important. That is the foundation of your psychology. You need to believe in yourself. Make sure you believe in yourself. Develop that confidence. The way that you do that, guys, the way that you develop belief in yourself is you need to prove to yourself. Set your daily goals. Go to the gym, work out. That is going to build confidence within yourself. Have different goals throughout the day that you can hit. Once you hit the goals, every time you hit a personal goal, you believe in yourself. You start building confidence. You start building trust within yourself. Okay. Self-esteem is important. Make sure your self-esteem is very, very high. You have to believe you are the best trader in the world. Make that illusion in your mind and believe in it. This board I've used in another video. We made a psychology video and I made a video on psychology by itself. I will leave a link in the description if you want a more detailed explanation on psychology. But we're going to cover this board and we're going to cover just the boom and bust cycle. That is the main thing that you need to understand when it comes to psychology. Okay. The boom and bust cycle. Here is the boom and bust cycle. This is the boom and bust cycle for an unprofitable trader. And here is the boom and bust cycle for a profitable trader. The difference between these two is you can see this trader has a break even and unprofitable equity line. This trader has a positive equity line that is going higher. Okay. The main difference between these two traders comes down to these areas down here. One, detaching yourself from the outcome. You have to detach yourself from every individual trade. Every time you take a trade, you shouldn't be looking at the trade and thinking, oh man, this was a loss. What did I do wrong? Maybe this rule doesn't work, or maybe that rule doesn't work. Or guys, make sure that you are taking at least 3 trades before you go back and review your trades. You're looking at your trades and you're looking at one trade, you look at one loss that you took and you're over examining the loss. You're looking at every single possibility. You're looking, oh, maybe I took a loss because of this. Maybe I took a loss because of this rule. Maybe this rule doesn't work. You're already questioning your setup. You're already questioning your trading plan. Why? You're questioning your trading plan based off one trade. Stop doing that. You need to question your trading plan based off 5 trades, based off 10 trades. All right. Now, if you took 10 losses in a row, hey, you need to go look at your trading plan. But if you just took one loss, guys, come on. You didn't even give your trading plan a chance. Understand that every trading plan will take losses. So you over examining every single loss that you take is what's creating your doubt. It's creating that fear. It's holding you back. Okay, stop holding yourself back. So to cure this, make sure you take at least 3 trades, and then you examine those trades and ask yourself, okay, am I following my trading plan on those 3 trades? Or maybe you can take 5 trades and ask yourself, am I following my trading plan based on those 5 trades? The market is all probability. No matter what you think, it doesn't matter. You cannot control nothing that happens in the market. The next major thing when it comes to psychology is changing your perspective on winning and losing. Every time you take a loss is not a negative thing. You need to stop attaching that to your trade. Stop attaching your emotions to your trades. Okay, that is the problem. Every time you take a winning trade, you're happy. The day is happy. You're positive. Every time you take a losing trade, you're down. You're negative. You're sad. It's over, right? Stop doing that. What you need to do is you need to attach winning and losing to your trading plan. You need to attach yourself to your trading plan. Attach your emotions to your trading plan, not to the markets. Why? Because you can't control the markets. What you can control is your trading plan. So when you take a win, what you need to ask yourself is, did I follow my rules? Did I follow my trading plan? If you did, great. You can be happy and you took a winning trade. If you took a loss, you don't have to be sad because you took a loss. Okay? No one says you have to be sad because you took a losing trade today. You can be happy. What you need to ask yourself is, did I follow my rules? If you followed every single rule based on your trading plan and the market still gave you a loss, there's nothing you can do about that, guys. You can't control that. That's the market, okay? You can't control that. So don't attach yourself to the trade. Attach yourself to your trading plan. Once you do that, you let the market handle the rest. You let your trading plan handle the market, okay? You should love your trading plan more than you love the charts. Let your trading plan handle the losses. Let your trading plan handle the wins. All your job is to do is follow it, okay? When you do that, guys, it turns you into a robot, okay? Guys, robots are literally the best traders, okay? Algorithms, they're literally the best traders. Okay, the reason why is because they are following a system. They're following rules, right? That's what you need to build. You need to build a system of rules that you can follow in and out, day in, day out. You get on the charts, you see your system, you take the trade. You get on the charts, you don't see your system, you don't take the trade. Okay, the robot is not feeling any type of emotion. It's not thinking, oh, I took a winning trade, so I should be happy. It don't care. Next trade, next trade, next trade. That's exactly how you should be, okay? The only way you should feel happy is if you followed your trading plan. The only way you should feel sad or you should feel negative is if you didn't follow your trading plan. How do you leave this unprofitable boom and bust cycle and transfer to a positive equity curve? Neutral mindset. You need to have a neutral mindset. What this means, you need to make sure after every trade, you're getting back to a neutral mindset. What does that mean? You took a win for the day. Great. Be happy. Next day you come on, forget about it. That didn't even happen. It's a new day. Every single trade in the markets is unique. You can have the exact same setup one day and have the exact same setup next day. The first day, that setup won. The next day, that setup lost, and they're exactly the same setup, right? They look the same. I know all of you have had this problem before, right? The thing is, that first day, there was different traders in that market than the next day. There was a different trader in that market. So what you need to do here is understand that you need to stay in a neutral mindset. What does that mean? You need to make sure after every trade, whether it's a win or a loss, you get back to a neutral mindset. Okay, you're not happy, you're not sad, you're calm, you're in the middle. New opportunity, new day. You need to do that every single day. You can't dwell on the previous trade. The reason why, if you're dwelling on the previous day, you're going to miss the opportunity for the next day. This is from Mark Douglas himself. Every single day, every single trade is unique. You're not going to have the exact same traders yesterday that you had today. You're not going to have the exact same hedge funds in the market at the exact same time that you had yesterday, today. Every single trade, every single day is unique. So you need to reset after every single trade. Make sure you are doing that. This is how you stay in a neutral mindset. When you understand this and you understand that every setup is unique, every trade is different, no matter how identical it looks. Once you understand that, that is going to get you into a positive equity curve. You're going to start becoming a robot. Once you become a robot, you're going to look at your system. You're going to look at your rules. You're going to take the trade. You're going to not take trades. You're going to take trades. You're going to not take trades. You're going to see how easy it is for you to execute and not execute trades. When you start trading like that, that's when you become a robot. That's when you start having this positive equity curve. Once you start following your system like a robot, your system becomes the trader, not you. That's what you want to achieve. This is how traders become profitable. Their system is what's trading, not them. Their emotions are not what's trading. Okay? They're not going based off what happened the last trade. They're not thinking about the last trade. The last trade is over. The next trade is what's important. The opportunity, the now moment is what's important. Okay? Once you can lock in and focus on the now moment every single day and stay into this neutral mindset, that's when you will start seeing profitability. That's when your trading plan and your trading system will start working for you and not against you. Okay. A lot of problems that a lot of traders have is because they're not systematically following their trading plan. They're not following their trading plan strictly. Okay. You have to treat your trading plan like it's life or death. All right. That's it. You have to treat it like it's life or death. Let your system do the trading. So your emotions needs to get out of the way. Okay. You need to shove your emotions out of the way. Deal with them. So every day, deal with your emotions and reset yourself back to a neutral mindset. So the next day you can follow the opportunity that is in the now moment. Every single trading plan takes losses. Always remember that. Every single trading plan takes losses. The market is uncertain, guys. There's so many big players in the market at different times of the day. You just don't know what the market's going to do next. That's why we have a system to follow. That's why we have rules to follow. Okay. Losses keep you humble. It just reminds you, it gets you back to earth. Okay. A lot of people, when they're taking winning streaks and they're on wins, they get into a euphoria. They get into a streak of euphoria. That's what explains right here in this boom cycle. So they'll get into a state of euphoria. They're taking winning trades, and they start looking at trades. They start looking at everything. They become overconfident. That overconfidence leads you taking low quality setups. You start taking low quality setups. You start taking just ugly things. You start taking everything. And that's when you start getting into a bust cycle. You start taking losses. And it's not until you realize the type of setups that you're taking, when your equity curve goes back lower, then you start looking for good setups again, and you become overconfident again. And it's just an endless cycle of back and forth of being break even and just unprofitable. The difference here is this trader, he's not being overconfident. This trader, he's taking a win. The next day, he's resetting. He's staying in a neutral mindset. He's not getting euphoric. He's not getting fearful. So after every loss, he's not getting fearful. After every win, he's not getting euphoric. He's staying in a neutral mindset because he knows it's not him that's trading. It's your system that's trading. It's not you. You're only a representation of your system. Once you become that type of trader, once you achieve that mindset of trading, you will become profitable. That concludes this video. That is the 3 keys of every single profitable trader. Every single profitable trader that you know, every single profitable trader that you see has these 3 characteristics. They understand these 3 fundamentals. All right. So If you guys enjoyed the video, please like and subscribe. Follow me on Instagram at ZSnipesOfficial. I send updates there. I send my trades there, right? Anything that you need, any questions that you have, you can reach me there. Make sure you join the Discord. It is free. It's a public free Discord. You can see my trades. We go live on there Tuesday, Wednesday, and Thursday. You can join us and we can trade live. Thank you guys for joining. Thank you guys for watching this video. I will see you in the next one. Peace out.